Next part, we will discuss the different types of audits. So audits can be classified as to objectives and as to auditors. So as to objectives, audit can be classified as financial statements audit, operations audit, and compliance audits. In financial statements audit, it involves expression of an opinion on the financial statements of an entity after the auditor or the CPA is satisfied now as to the fairness of the financial statements in all material respects in accordance with the applicable financial reporting framework. So example of this is the statutory audit of the entity's annual financial statements or audit of the entity's financial statements. Here, the objective of the auditor is to determine the fairness of the financial statements and to issue opinion about it. So the criteria here is the applicable financial reporting framework like the GAAP in the Philippines, PFRS, or the Philippine Financial Reporting Standards. Another type of audit Another type of audit is operations audit. Operations audit involves systematic review of an entity's activity in relation to a specified objective for the purpose of assessing its performance. Now, if in financial statements audit, the focus is the financial information or financial aspect of an entity, here in operations audit, the focus is the efficiency and effectiveness of operations. So, meaning, for example, efficiency, how well the entity used its resources in achieving its objectives. So, was it able to reduce cost, achieve the maximum revenue? So, those are the focus of efficiency. While effectiveness naman, focus on whether the entity has achieved its goal or objective. So for efficiency, normally uh, a type of operations audit focusing on efficiency is a management audit, while a type of operations audit focusing on effectiveness is called or considered a program results audit. So these are some examples of operations audit, so focusing on the efficiency and effectiveness of the entity's operations. So some specific example of operations audit. So let's say auditing the company's information technology system or IT system. So here the objective is to evaluate the effectiveness as well as the efficiency of the entity's information technology system. The criteria here is the standards of management on the effectiveness or efficiency. So what are the management set objectives? So when it comes to their IT system implementation. Finally, we have compliance audit. So compliance audit involves determination so whether a person or entity has adhered to laws, regulations, or contracts. So here the focus is compliance of the entity to some sort of regulation or law or even contracts. So example, so audit of BIR of the company's tax return. So in this case, the objective is to determine whether the entity is compliant with existing tax rules and regulations. So the criteria here are the tax laws or regulations implemented by our government. So next, we have classification of audit according to auditors. So according to auditors, we have external audits, we have internal audits, and we have government audits. When we say external audit, these are performed by auditors who are independent or not part of the organization whose representations are being audited. So they do not work in the entity, they do not have investment or any interest, financial interest in the entity. So that's what we mean by independent. So auditors here are called independent or external auditors. So for example, in the independent audit of financial statements, the auditors are required to be independent of the organization that they are auditing. So hence, the auditors of the financial statements are also called external auditors or independent auditors. Next, we have internal audit. So in internal auditing, so the objective is to provide assurance and consulting activity to add value to the organization. So it is also considered independent in the sense that there is an organizational independence on the part of the auditor auditing the unit of the organization subject to internal audit. So, however, what happens in internal audit is that the auditors are part of the organization. So, although they are auditing a unit of organization which they do not belong, but ultimately they are part, the auditor and the unit that he or she is auditing, so they are both part of the same entity. So that is why it's called internal audit. Okay, and also internal auditing goes beyond the financial aspect of an entity and includes areas such as governance, risk management, and control. So unlike in financial statements audit, so the focus is the financial statements of the entity. Here in internal audit, it can cover no areas beyond the financial aspect of an organization. So even the governance process, the risk management process, or control processes of an entity can be subjected to internal audit. And also, although we mentioned earlier that the goal of the internal audit or internal auditor is to provide objective and independent assurance and consulting activity to the entity, to add value to the organization, it cannot reach the same level of independence compared to external auditors. So because at the end of the day, as mentioned earlier, internal auditors are employed by the entity or by the company. Okay? So therefore, independence can be maximized if internal auditors report to senior personnel or officers not directly involved in the management of the organization. So, for example, they report directly to the audit committee of the board of directors. So, because audit committee of the board of directors consists of independent directors. So, when we say independent directors, so these are senior officers, so that are not directly involved in managing the corporation or managing the company or organization. Okay, so if for example the problem or the choices in the problem did not include audit committee among the choices, then your next best option is the board of directors. So meaning to say, the internal auditor should report directly to the entity's board of directors, or they should have access to the board of directors of the entity. So rather than the officers or the what we call this managing officers of the entity. Then finally, we have government auditing or government audit. So in government auditing, it involves determining whether the government funds are being handled properly and compliance with existing laws and regulations. So or whether the government program of a particular agency are being conducted efficiently and economically. So here in the Philippines, the government agency that conduct the audit of the different government agencies, instrumentalities, and even GOCC. So when we talk about GOCC, so those are government-owned and controlled corporation. So it's the COA or the Commission on Audit. So it is the recognized supreme audit institution here in the Philippines. So the COA or Commission on Audit is embodied in our Philippine Constitution. So meaning it's a part of our mother law here in the Philippines. And COA or Commission on Audit is comprised of one chairman and two commissioners, collectively called the Commission proper. So this is the leadership of our Commission on Audit here in the Philippines. So the members of this Commission proper, so 3 members in total, must either be a CPA or a lawyer. So provided that at any time, the members must not be from one profession only. So meaning the 3 members could not be all CPAs only or all lawyers only. So it must always be a mix of CPAs and lawyers. So they are appointed by the President of the Philippines. So with consent from Commission on Appointments for a fixed term of 7 years. So finally, let us summarize. So the relationship among the different types of audits. So here we have the objectives of the entity. So we have the type of audit and the auditor. So if the objective is the reliability of financial reports, so usually that is a financial audit or financial statements audit. So those that who can perform financial audit can either be external auditor, particularly for independent audit of financial statement. It is required that an external auditor must perform the independent audit of the entity's annual financial statements. So government auditor can also perform financial audit for financial information of government agencies and instrumentalities. Internal use can also conduct financial audit. However, it will only be for internal use of the organization. So they cannot use that for statutory finding if the one who conducted the financial audit is the internal auditor. So for statutory audit or statutory filing, so who is required is the external or independent auditor. So next, if the objective is effective and efficiency of operations, so that is operations audit, and operations audit can be conducted by government auditor, internal auditor, or external auditor if outsourced. So usually, operations audit are done by government auditor and internal auditor. But it is also allowed or it is also possible that the one who will conduct operations audit is an external auditor if that function was outsourced by the organization. So finally, if the objective is compliance with laws and regulations, so that is considered as a compliance audit. So compliance audit can be performed by government auditor and internal auditor. And sometimes it may also be outsourced. In that case, it will be performed by the external auditor.